Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the recent price surge exceeding previous highs. The forecast price also projects continued growth over the next week, reaching levels above the current market value. This suggests that the underlying demand for Bitcoin remains strong, and that the upward momentum is likely to persist. Therefore, I recommend a long position in Bitcoin with an entry price around $69,500. A stop-loss order should be placed at $67,800 to mitigate potential downside risk. The target price could be set at $75,500, aiming to capitalize on the projected price increase. This strategy capitalizes on the bullish market sentiment and the historical price trends, while incorporating risk management measures to protect potential losses. Ethereum's recent price history shows both upward and downward movements, indicating a volatile market. The forecast suggests a slight upward trend over the next week, which aligns with the current price hovering near the support level of $2,648.2, while the resistance at $3,482.51 presents a potential ceiling for immediate growth. The overall trend suggests a medium-term bullish outlook. Therefore, an investment strategy for Ethereum should adopt a long position with a medium-term perspective. A suitable entry price would be around $2,490, which is below the current price and offers a margin of safety. The stop-loss should be set at $2,420, protecting against significant downside movements. The target price could be set at $2,660, aiming to capitalize on the projected upward trend. This strategy allows for potential profit while managing risk within a reasonable time frame. Based on the provided information for Ripple, a short-term investment strategy appears most suitable. The 2-week price history demonstrates a slight upward trend, but the forecast suggests a consolidation phase with prices hovering around the current levels. The support price at $0.5284 provides a solid base for potential buying opportunities, while the resistance at $0.5973 indicates an upper limit for the immediate price movement. Therefore, a long position is recommended with an entry price around $0.515, aligning with the forecast and the recent price action. The stop-loss should be set at $0.503, below the recent low point, to minimize potential losses. The target price could be set at $0.542, aiming for a moderate profit based on the historical price highs in the forecast. This strategy capitalizes on the potential for a short-term price increase while managing risk through a well-defined stop-loss. Based on the historical price data and the provided forecast for Solana, an aggressive investment strategy suggests a long-term approach. The historical prices demonstrate a generally upward trend, with recent fluctuations around the $170–$180 range. The forecast predicts continued growth, reaching prices above $180 within the next week. This upward momentum, coupled with the support price at $181.53, indicates a favorable environment for a long position. Therefore, an investment strategy for Solana would involve entering a long position at the current price, around $166. The stop-loss should be set at $162, protecting against a significant price drop. Target price should be set at $192, aiming to capitalize on the potential for Solana to reach the resistance level. This strategy leverages the positive price trends and forecast, aiming for a long-term gain while managing risk through a well-defined stop-loss. Given the provided price data for Cardano, the historical prices suggest a generally upward trend with some recent fluctuations. The forecast indicates a slight upward movement in the coming week, hovering around the $0.34 mark. The support price sits at $0.3538, providing a floor for potential price dips. The resistance at $0.388 represents an obstacle for further upward movement. Considering this information, a medium-term investment strategy with a long position appears suitable. An entry price around $0.34, aligning with the current price and the forecast, would be appropriate. A stop-loss order placed at $0.334, slightly below the recent lows, would help mitigate risk. The target price could be set at $0.364, aiming to capture potential gains as the price approaches the resistance level. This strategy allows for capitalizing on the expected upward momentum while managing risk effectively. Given the historical price data and the bullish forecast for SU coin, a medium-term investment strategy appears promising. Price has shown fluctuations, but the overall trend suggests potential for growth. The forecast indicates a steady increase in price over the next week, reaching levels above the current market price. This suggests a favorable environment for long-term investors. Therefore, I recommend a long position on SU coin. An entry price around $2.00 would be suitable, allowing for potential profit as the price rises towards the forecast target of $2.35. To manage risk, a stop-loss order should be placed at $1.90, protecting against significant price drops. The target price can be set at $2.30, providing a reasonable profit margin while allowing for potential further upside. Filecoin's recent price history shows fluctuations around the $3.50 range, while the forecast suggests a slight upward movement, reaching around $3.56 in the coming week. The overall trend remains uncertain. Considering the forecast and the price history, a medium-term investment strategy appears more suitable. A long position is recommended for Filecoin, aiming to capitalize on the potential price increase. The entry price should be around $3.47, slightly below the current price and near the support level. This allows for a margin of safety while still entering at a potentially attractive price point. The stop loss should be set at $3.43, slightly below the recent lows, to protect against unexpected price drops. The target price can be set at $3.72, aligning with the recent highs and reflecting the potential for a moderate upward movement. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Given the price trends and forecast for Theta network, a cautious investment strategy would focus on a short-term approach. The historical prices show a slightly downward trend over the past 2 weeks, with the current price hovering near the support level of $1.128. The forecast suggests that the network might continue to decline slightly in the coming week, reaching around $1.1. This indicates a slightly bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the potential for a price decrease. An aggressive entry price could be $1.14, aligning with the recent price action and allowing for a reasonable profit margin. The stop loss should be set at $1.18 to protect against any unexpected upward movement. The target price could be $1.08, slightly below the forecasted lowest price, allowing for a healthy profit while minimizing risk. Given the provided price data and forecast for Dogwifhat, a cautious investment strategy would be suitable. The 2-week price history shows a general downward trend, with the forecast predicting further declines in the coming week. The current price is hovering near the support level of $2.361, indicating potential for further downside movement. Therefore, a short position on Dogwifhat appears to be the most appropriate strategy. An entry price of $2.38, slightly above the current support level, allows for a small margin of safety. The stop loss should be set at $2.49, above the recent price high, to minimize potential losses if the price unexpectedly rallies. The target price could be set at $2.17, aligning with the lower end of the forecast range, aiming to capture potential profit from the anticipated price decline. This strategy prioritizes risk management while aiming to capitalize on the bearish outlook for Dogwifhat. Given the price trends and forecast for Stellar, a medium-term investment strategy focusing on a long position appears to be the most suitable approach. The historical price data shows a slight upward trend, with the current price hovering around the support level of $0.0924. Forecast indicates a gradual increase in price over the next week, reaching towards the resistance level of $0.098. This suggests a potential for continued growth in the short to medium term. Therefore, an investment strategy involving a long position in Stellar is recommended. A suitable entry price would be around $0.0935, aligning with the current price and providing a small margin of safety. The stop loss should be set at $0.0924, the support level, to limit potential losses. The target price can be set at $0.0975, aiming to capture a portion of the potential price increase towards the resistance level. This strategy allows for a balanced approach, capturing potential gains while mitigating risk. Given the price trends and forecast for Starknet, a cautious investment strategy would focus on a short-term approach. While the historical prices show some upward movement, the recent 2-week price change indicates a slight downward trend. The forecast suggests a continuation of this downward trend, with prices potentially falling below the current level. The support price at $0.3698 provides a potential floor for the price, but the resistance at $0.4346 suggests limited upside potential in the near term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve an entry price of $0.395, aligning with the recent price action and the forecast. The stop loss should be set at $0.403 to protect against any unexpected price recovery. The target price could be set at $0.365, slightly above the support level, allowing you to take profits before the market potentially hits major support. Given the price trends and forecast for PENDLE, a medium-term investment strategy appears most suitable. The historical price data shows a volatile period with both upward and downward movements. However, the forecast suggests a slight upward trend over the next week, indicating potential for growth. The support price at $4.615 provides a safety net, while the resistance at $5.275 presents a potential ceiling for the price. Therefore, a long position is advisable for a medium-term investment strategy. An entry price around $4.70, slightly above the current price and close to the support level, allows for a favorable entry point. The stop loss should be set at $4.60, below the support price, to limit potential losses. The target price could be set at $5.10, aiming to capture a significant portion of the potential upward movement suggested by the forecast. This strategy allows for a balanced approach, capitalizing on the potential for growth while mitigating risks through a well-defined stop loss. Based on the provided price information for render, the strategy suggests a short-term bearish outlook. The 2-week price change shows a downward trend, and the forecast indicates further declines. While the support price sits at $4.771, the resistance is at $5.207, suggesting a potential for a pullback. Given these factors, a short position would be the most suitable strategy to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at the current price of around $4.6, with a stop loss set at $4.771 to protect against unexpected price surges. The target price could be set at $4.4, aligning with the recent low and allowing for potential profits before the market potentially finds support. This strategy aims to capitalize on the short-term bearish momentum indicated by the price trends and forecast. Given the VeChain price trends and forecast, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, and the forecast indicates a continuation of this trend with prices potentially dropping further. The support price of $0.02116 acts as a potential floor for the asset, while the resistance at $0.02267 suggests limited upward momentum. In this scenario, a short position is advisable to capitalize on the anticipated price decline. An aggressive short-term investment strategy could involve entering a short position at $0.0218, aligning with the recent price action and the forecast. A stop loss could be placed at $0.0223, slightly above the entry price, to mitigate potential losses if the price unexpectedly reverses. The target price could be set at $0.0204, slightly above the lowest forecasted price, allowing for potential profits before the market potentially rebounds. This strategy leverages the short-term bearish outlook while managing risk through a defined stop loss. Given the historical price data and the forecast for Binance Coin, a cautious medium-term investment strategy appears most suitable. Price has shown some volatility recently, with a slight downward trend over the past 2 weeks. However, the forecast suggests a gradual recovery in the coming week, potentially reaching the support level of $576.5. Therefore, a long position on Binance Coin is recommended with an entry price around $576.5, aligning with the support level. The stop loss should be set slightly below the entry price at $573, protecting against further downward movement. Target price can be set at $592, aiming to capitalize on the forecast's upward momentum. This strategy allows for a moderate risk profile while aiming for potential gains within a medium-term time frame. Given the price trends and forecast for Conflux, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward trend, with the current price hovering near its support level of $0.126. The forecast suggests a potential decline in price over the next week, reaching as low as $0.139, while there's a chance for a short-term rebound towards the resistance level of $0.1558. The overall trend suggests a bearish outlook. Therefore, a short position is advisable to capitalize on the anticipated price decline. An aggressive short-term investment strategy could involve entering a short position at $0.144, close to the current price. The stop loss should be set at $0.152, slightly above the recent high, to protect against any unexpected price surges. The target price could be set at $0.135, aiming to capture a potential drop towards the support level. This strategy allows for potential profits from a short-term price correction, while minimizing risk with a well-defined stop loss. Given the price trends and forecast for Worldcoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $1.659. The resistance is at $2.1, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $1.88 would be ideal, aligning with the forecasted price. The stop loss should be set at $1.93 to protect against any unexpected price recovery. The target price should be set at $1.66, slightly above the support level, allowing you to take profits before the market hits major support at $1.659. Given the price trends and forecast for Avalanche, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward trend, but the forecast indicates a potential consolidation or slight decline in the coming week. The current price is hovering near the support level of $24.99, suggesting that there might be some buying pressure at this level. However, the resistance at $29.02 is relatively far away, indicating limited upside potential in the short term. Therefore, a short-term long position with a cautious approach is advisable. An entry price around $24.99 could be considered, aligning with the support level. The stop loss should be set slightly below the entry price at $24.70 to minimize potential losses. The target price could be set at $25.50, aiming for a modest profit within the short term. This strategy allows you to capitalize on potential upward movement while mitigating risk by setting a tight stop loss. Based on the provided price history and forecast for Jupiter, a medium-term investment strategy appears most suitable. Price history shows a fluctuating trend with a slight upward bias. The forecast indicates continued price growth, suggesting a potential bullish trend in the coming weeks. Therefore, a long position is recommended. A suitable entry price would be around $0.978, aligning with the current forecast and providing a margin for potential price fluctuations. To manage risk, a stop-loss order should be placed at $0.966, the support price, to limit potential losses. The target price could be set at $1.04, representing a reasonable profit target based on the forecast and historical price movements. This strategy allows for capitalizing on the potential upward momentum of Jupiter, while mitigating risk through a well-defined stop-loss order. Based on the provided price information for EOS, the 2-week price change shows a downward trend. The forecast further indicates potential declines in the coming week. Considering the historical price data, the current price is hovering near the support level of $0.4415, suggesting a potential bounce. However, the downward trend in forecast suggests caution. A short-term investment strategy focusing on a short position appears more suitable given the current market conditions. An entry price of $0.45, slightly above the support level, allows for a buffer against immediate price fluctuations. The stop loss should be placed at $0.455, aiming to limit potential losses if the price unexpectedly rises. The target price, set at $0.425, aligns with the forecast's lower price projections, allowing for profit taking before the price potentially reaches the support level. This strategy capitalizes on the anticipated short-term decline, while mitigating risk through a well-defined stop loss. Based on the provided data for TRON, a cautious medium-term investment strategy appears most suitable. The historical price data reveals a slight upward trend, but the recent forecast indicates a potential consolidation or slight decline in the coming week. The current price sits near the support level of $0.1605, suggesting a potential for a bounce back. However, the resistance level at $0.1627 acts as a hurdle for significant upward movement. Therefore, a long position could be considered with an entry price around $0.1615, aiming to capitalize on a potential rebound towards the resistance. A stop loss could be placed at $0.1600 to limit potential losses if the price dips below support. The target price could be set at $0.1630, allowing for a moderate profit if the price manages to overcome the resistance. This strategy balances the potential for upside with risk management, making it suitable for a medium-term investment horizon. Based on the provided price data and forecast for SE, a short-term investment strategy appears most suitable. The historical price data shows a recent upward trend, but the forecast suggests a slight pullback in the coming week. The support price of $0.3726 provides a potential floor for the price, while the resistance at $0.4303 indicates a ceiling for near-term gains. Therefore, a short-term long position could be considered. An entry price near the current price of around $0.39 could be strategically chosen, with a stop loss set slightly below the support level at $0.37. This protects against unexpected downward movements. The target price could be set at $0.42, aiming to capture potential gains towards the resistance level before the predicted pullback. This approach allows for capitalizing on the current upward momentum, while mitigating risk through a well-defined stop loss. Based on the provided Shiba Inu price information, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating pattern with recent upward movement, but the forecast indicates a continuation of this upward trend. The current price is near the support price, suggesting a potential for further price appreciation in the short term. Therefore, a long position is recommended to capitalize on this potential. An entry price around $0.000179, aligning with the recent price action and the support level, would be appropriate. A stop loss should be placed slightly below the entry price, around $0.000179. To mitigate risk, the target price could be set at $0.000186 based on the forecast, allowing for potential profits while staying within the predicted price range. Based on the provided historical price data and the 1-week forecast for Dogwifhat, an investment strategy focused on a medium-term perspective appears most suitable. Price history reveals a generally upward trend with fluctuations, suggesting potential for further growth. However, the forecast indicates a slight increase in price over the next week, suggesting a period of consolidation rather than a sharp surge. Therefore, a long position is recommended, aiming to capitalize on the medium-term bullish potential. An entry price around $0.16, slightly below the current price, allows for a margin of safety while still entering the market at potentially undervalued point. The stop loss should be placed at $0.151, the recent support level, to limit potential losses. The target price can be set at $0.20, aligning with the resistance level, factoring in the potential for a moderate price increase over the medium term. This strategy balances risk and reward, aiming to capture a reasonable profit while mitigating potential downside. Based on the provided data for Hooked Protocol, a short-term bearish investment strategy appears to be the most suitable approach. Price history shows a consistent downward trend over the past 2 weeks, with the forecast indicating further declines. The current price is close to the support level of $0.3801, suggesting that a potential bounce might be limited. Therefore, a short position would be recommended, aiming to capitalize on the anticipated price drop. An aggressive entry point could be around $0.389, aligning with the recent price action. Setting a stop loss at $0.404 would protect against any unexpected upward movement. The target price could be set at $0.34, slightly above the lowest predicted price in the forecast, allowing for potential profit taking before reaching the significant support level of $0.333. Based on the provided Aevo price data and forecast, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows a recent downward trend, with the price fluctuating around the support level of $0.319. The forecast suggests a continuation of this downward trend, with prices potentially dropping to $0.299 in the coming week. This indicates a bearish outlook in the short term. Therefore, a short position on Aevo is recommended. An entry price of $0.325 aligns with the current price and the potential for a further decline. The stop loss should be set at $0.336 to minimize potential losses if the price unexpectedly rebounds. The target price can be set at $0.290, allowing for a reasonable profit margin while considering the potential for a further drop towards the support level. This strategy aims to capitalize on the anticipated downward momentum while mitigating risk through a well-defined stop loss. Given the provided price information for Litecoin, a short-term investment strategy appears most suitable. The recent price history demonstrates a downward trend, and the forecast predicts further declines over the next week, while the support price at $0.006512 suggests a potential floor. The resistance at $0.007349 indicates limited upside potential. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An aggressive entry price could be around $0.00662, aligning with the recent price action. To manage risk, a stop loss order should be placed at $0.0069, slightly above the entry price. To limit potential losses, the target price could be set at $0.00593. Aiming to capture a significant portion of the predicted decline. This strategy focuses on capitalizing on the short-term bearish momentum in Litecoin. Given the price trends and forecast for Sun Coin, a cautious investment strategy focusing on the short to medium term would be appropriate. The historical prices show a slight upward trend, but the forecast suggests a period of consolidation or even a slight decline. The current price is near the support level of $0.01725, indicating a potential buying opportunity if the price holds above this level. The resistance at $0.01886 suggests that further significant upward movement may be limited in the short term. Therefore, a long position could be considered for a short to medium term investment. An entry price around $0.0175 would allow you to buy near the support level. A stop loss should be set at $0.0172 to protect against a potential drop below the support. The target price could be set at $0.0185, aiming to capitalize on a potential upward movement towards the resistance level. This strategy balances risk and reward, allowing you to participate in the potential upside while mitigating losses if the price declines. Based on the provided price information for PEEP, a cautious investment strategy is recommended. The 2-week price history shows a general downward trend, with the forecast suggesting further declines in the coming week. The current price is hovering near the support level of $0.00000966, indicating potential vulnerability to further downward pressure, while the resistance level of $0.00001067 presents a potential upside target. The overall price action suggests a higher probability of a continued decline. Therefore, the short position on PEEP is advisable for a short-term investment horizon. An entry price around $0.00000910, slightly above the current price, allows for some margin of safety. The stop loss should be placed at $0.00000966, the support level, to limit potential losses. The target price could be set at $0.00000850, aiming to capitalize on the anticipated price decline. This strategy prioritizes risk management and capital preservation, seeking modest profits from the expected downward movement in PEEP's price. Based on the provided information for TRON coin, a cautious short-term investment strategy is recommended. The 2-week price history reveals a slight downward trend, and the forecast predicts further price declines over the next week, while the support price at $4.678 offers a potential floor. The resistance at $4.849 suggests limited upside potential. Given this outlook, a short position seems more appropriate to capitalize on the anticipated price drop. To execute this strategy, consider an entry price of $4.79, aligning with the recent price action, and providing a small margin for price fluctuations. Set a stop loss at $4.85 to protect against unexpected upward movements. The target price should be set at $4.68, slightly above the support level, allowing for a reasonable profit margin, while minimizing the risk of overshooting the target. This strategy focuses on short-term gains by leveraging the expected price decline in TRON coin. Given the current price trend and forecast for Bitcoin Cash, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating pattern with both upward and downward movements, while the forecast suggests a slight upward trend over the next week. The recent price drop below the support level of $369.4 indicates potential volatility. Therefore, a medium-term investment strategy allows us to capitalize on the potential for price increases, while managing the risk associated with short-term fluctuations. An entry price of $345 would allow us to buy at a discounted price, anticipating a move towards the resistance level of $381.6. A stop loss at $335 would safeguard against significant downside risks, while a target price of $375 would enable us to secure profits before the potential for a pullback. This strategy balances risk and reward, aiming for a moderate return within a time frame that accommodates market fluctuations. Given the price trends and forecast for Chainlink, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering around the support level of $11.49. The forecast suggests Chainlink might remain stable around $11 for the next week. This indicates a period of consolidation before any significant price movement. In this scenario, a neutral stance is advisable, waiting for clearer signals to determine the direction of the trend. However, if the price manages to break above the resistance level of $12.95, it could signal a potential bullish reversal. In this case, a long position could be considered with an entry price around $12.95, a stop loss below $12.00, and a target price around $13.50. Conversely, if the price falls below the support level of $11.49, it could indicate a continuation of the downward trend. In this scenario, a short position could be considered with an entry price around $11.40, a stop loss above $11.80, and a target price around $10.50. Polkadot's 2-week price change shows a slight upward trend, although the forecast suggests a slight downward correction in the coming week. The current price sits near the support level of $4.102, indicating a potential buying opportunity. Considering the forecast and support level, a long-term investment strategy seems suitable. Therefore, a long position in Polkadot is recommended. The entry price should be around $4.00, below the current price but above the support level. The stop loss should be set at $3.90 to minimize potential losses. The target price could be $4.40, aiming to capitalize on the potential for Polkadot to reach the resistance level. This strategy allows for potential profit from the anticipated upward movement, while managing risk through a well-defined stop loss. Given the price trends and forecast for Near protocol, cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a recent decline, with the current price hovering near the support level of $4.056. The forecast suggests Near protocol could potentially drop further in the coming weeks, reaching as low as $3.91. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at $4.23, aligning with the recent price action and the upper bound of the predicted price range. The stop loss should be set at $4.35 to protect against any unexpected price recovery. The target price should be set at $3.90, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $4.056. Based on the provided price history and forecast for stacks, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with a recent dip. The forecast suggests a continued downward movement, with prices potentially reaching as low as $1.58. This bearish outlook, coupled with the support price at $1.642, indicates a potential entry point for a short position. To execute this strategy, consider entering a short position at $1.64, the support level, as it offers a good risk-reward ratio. Set a stop loss at $1.728, the resistance level, to limit potential losses if the price unexpectedly rises. A target price of $1.57, slightly above the forecasted lowest price, allows for profit taking before the market potentially finds support. This strategy capitalizes on the anticipated downward price movement of stacks, while managing risk through a well-defined stop loss. Based on the provided data for Aptos, a short-term bearish investment strategy appears to be the most suitable approach. The 2-week price change showcases a downward trend, and the forecast suggests a continuation of this decline. While the support price sits at $9.09, the resistance level at $10.05 indicates limited upside potential. Therefore, a short position is recommended with an entry price of $9.20, aligning with the current price near the historical high. To mitigate risk, the stop loss should be set at $9.50, slightly above the recent resistance. Target price should be set at $8.80, aiming to capitalize on the anticipated price decline towards the support level. This strategy prioritizes capitalizing on the short-term bearish momentum, while managing risk through a well-defined stop loss. Based on the provided Litecoin data, a cautious short-term investment strategy appears most suitable. While the historical price shows some fluctuations, the forecast indicates a slight downward trend over the next week. This suggests a potential opportunity to profit from a short position. An ideal entry point would be around $68, aligning with the forecast and slightly above the current price. Setting a stop loss at $70 would limit potential losses if the price unexpectedly rises. The target price should be around $66, taking advantage of the anticipated downward movement while staying above the support price of $66.19. This strategy focuses on capitalizing on short-term price fluctuations while managing risk through a well-defined stop loss. Given the price trends and forecast for Uniswap, an aggressive investment strategy would focus on a long short-term approach to capitalize on the potential for sustained upward movement. The historical prices show a general upward trend, with recent fluctuations around the support price of $8.146. The forecast suggests a continued climb towards the resistance level of $9.325, indicating a bullish outlook in the medium to long term. Therefore, a long position is advisable to take advantage of this potential growth. An entry price of $8.15, slightly above the current price and the support level, would allow for a margin of safety. The stop loss should be set at $7.60, a level below the recent lows, to protect against unexpected downward movements. The target price could be set at $9.20, aiming to capture a significant portion of the potential upside before reaching the resistance level. This strategy allows for a balanced approach, managing risk while aiming for substantial returns in the medium to long term. The provided Bittensor price data suggests a period of consolidation, followed by potential upside. While the recent 2-week price change shows some fluctuations, the forecast indicates a gradual upward trajectory. Price is currently hovering near the support price of $485.2, suggesting a potential bounce back. Considering this, a long-term investment strategy appears favorable. Therefore, I recommend taking a long position in Bittensor with an entry price at $485.2, aligning with the support level. The stop loss should be set at $463, slightly below the recent low, to protect against unexpected downward movements. Target price can be set at $632.7, the resistance level, aiming to capture potential gains as the price potentially moves towards resistance. This strategy allows for a long-term investment horizon, capitalizing on the predicted upward trend while managing risk through a well-defined stop loss. Given the internet computer price data and forecast, a cautious investment strategy is recommended. The 2-week price change shows some volatility, with a slight downward trend. The forecast predicts further decline in the coming week, suggesting a bearish outlook for the short term. The support price at $7.73 acts as a potential floor for the price, while the resistance at $8.171 presents a significant hurdle for upward movement. Therefore, a short position on internet computer is advisable for a short-term investment horizon. An entry price of $7.85, slightly above the current price and near the recent resistance, allows for a quick entry if the price dips. The stop loss should be set at $8.00 to limit potential losses if the price unexpectedly rallies. The target price can be set at $7.50, aligning with the lower end of the forecast, and offering a reasonable profit margin before the price potentially finds support at $7.73. Artificial Superintelligence Alliance shows a 2-week price change that's a potential upward trend. The forecast price indicates continued growth, with a projected range from $1.25 to $1.36. Considering these factors, a long-term investment strategy appears promising for Artificial Superintelligence Alliance. To implement this strategy, we can set an entry price at $1.29, aligning with the recent price action and below the forecast high. A stop loss should be placed at $1.23, providing a safety net below the recent lows. The target price can be set at $1.42, aiming for a substantial gain near the resistance level. This strategy allows us to capitalize on the anticipated upward momentum while managing risk effectively. Based on the provided price information for Optimism, a cautious investment strategy is recommended. The 2-week price history shows volatility, with a recent dip towards the lower end of its range. The forecast suggests further potential decline in the coming week, aligning with the bearish sentiment indicated by the price history. Considering this outlook, a short position on Optimism is advised. A suitable entry price would be around $1.54, slightly above the current price and below the forecast lows. The stop loss should be placed at $1.58 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $1.45, aiming to capitalize on the anticipated price decline. This strategy prioritizes risk management by setting a stop-loss order and focuses on a short-term opportunity to profit from the expected downward trend in Optimism's price. Given the Ethereum Classic price history, forecast, and technical indicators, a short-term investment strategy appears most suitable. Price has been relatively stable around $18, with a slight upward trend in the forecast. The support price is at $19.42, suggesting a potential floor for the price. However, the resistance at $20.83 indicates a potential ceiling for the upward move. Therefore, a long position is recommended to capitalize on the potential price increase towards the resistance level. An aggressive entry price would be around $18.50, aligning with the recent price action and the forecast. The stop loss should be set slightly below the support price at $19.00 to protect against unexpected price drops. The target price could be set at $20.50, aiming to capture a significant portion of the potential price movement before encountering the resistance level. This strategy focuses on short-term gains by leveraging the anticipated upward momentum within a defined risk-reward framework. Given the price trends and forecast for Ethereum name service, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward trend, but the forecast indicates a period of consolidation around $16. The support price is at $16.07, suggesting a potential floor for the price. The resistance is at $18.24, indicating that a significant upward breakout is unlikely in the near term. Therefore, a long position is recommended, but with a tight stop loss to manage risk. An entry price of $16.10 would allow you to buy in slightly above the support level. The stop loss should be set at $15.90, protecting your investment from a sudden drop below the support. The target price should be set at $17.50, aiming to capture a potential upside move towards the resistance level. This strategy balances the potential for profit with the need to manage risk in a volatile market. Given the price trends and forecast for Solana name service, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $0.2253. The resistance is at $0.2522, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $0.233 would be ideal, aligning with the current price and the forecasted price. The stop loss should be set at $0.239 to protect against any unexpected price recovery. The target price should be set at $0.215, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.2253. This strategy aims to capitalize on the short-term bearish momentum of Solana name service, while managing risk with a defined stop loss. Based on the provided price history and forecast for Aave, an aggressive investment strategy would favor a long-term position. The historical price data reveals a clear upward trend, with recent price action breaking above previous resistance levels. This suggests strong buying pressure and potential for further growth. The forecast also supports this bullish outlook, predicting continued price increases over the next several weeks. Therefore, a long position in Aave is recommended for an aggressive, long-term investment strategy. An entry price of $141, aligning with the recent dip in price, could provide a favorable entry point. A stop loss order placed at $132, slightly below the recent support level, would protect against unexpected market reversals. The target price should be set at $174, the highest point in the recent price history, allowing for significant profit potential if the bullish trend continues. Based on the provided price history and forecast for Injective, a cautious investment strategy would focus on a short-term approach. While the historical prices show some volatility, the 2-week price change is relatively flat. The forecast indicates a slight downward trend, suggesting potential for limited upside in the near future. The current price is near the support level, which could provide a temporary floor for the price. Therefore, a short position is recommended for a short-term investment strategy. An entry price of $18 could be considered, aligning with the forecast and the current price. The stop loss should be set at $19 to protect against any unexpected upward movement. The target price could be set at $16, taking advantage of the potential for a decline towards the support level. This strategy aims to capitalize on the anticipated downward momentum while minimizing risk through a tight stop loss. Based on the provided Polygon price data, the current trend suggests a bearish outlook in the short term. The 2-week price change shows a downward trajectory, and the forecast indicates further declines, while the support price at $0.321 offers a potential floor. The resistance at $0.3652 suggests a struggle to break upward. Given this context, a short-term investment strategy focusing on a short position seems appropriate. An ideal entry price for this strategy would be around $0.335, aligning with the recent price action and slightly above the immediate support level. To manage risk, a stop-loss order should be placed at $0.345, ensuring a buffer against potential upward price movements. The target price for this short position could be set at $0.305, aiming to capitalize on the predicted decline while staying below the significant support level. This strategy capitalizes on the short-term bearish sentiment surrounding Polygon, aiming for a modest profit within a limited time frame.